Hey everyone, welcome back to Corporate Decoder, the place where we uncover the hidden stories behind the numbers. Today we're diving into a filing from CCSC Technology International Holdings Limited. Now, they're giving us a peek behind the curtain with their 6-month financials. And let's just say some of the numbers might just make you blink before we jump in. If you love getting these deep dives into financial reports, make sure you hit that subscribe button. And hey, we've got a fantastic community over on Discord, link down below, where we chat about all things finance. Alright, so CCSC Technology International Holdings Limited, they've put out a report covering the 6 months that ended on the 30th of September of 2025. This is essentially a check-in on how the company is doing financially. And it is important because it helps us understand their health and where they might be heading. Think of it like getting a report card for the first half of their school year. Their fiscal year is a bit different, but this report is coming out in late December of 2025, giving us a look back at their performance up to the end of September. Essentially, they are telling us how they performed for the first 6 months of their financial year, and this is filed as a Form 6K report. This is a standard document for foreign companies traded here in the US to provide updates on their operations, often including financial results. Now, the big picture here is that CCSC Technology is giving us an update on their financial results for the period ending the 30th of September 2025. What is really interesting in these filings are the actual financial statements and the management's discussion about those numbers. It is where the company tries to explain what happened and why. Let's talk about the core of what they've shared. They've provided unaudited, condensed, consolidated financial statements. Now, unaudited means they haven't been checked by an independent accounting firm yet, so think of it as a preliminary snapshot. Condensed means they are presenting the most important bits, not every single detail. And consolidated means they are showing the financial picture of the parent company and all of its subsidiaries together. This is how they provide the financial backbone of this report, showing us the numbers that matter. Following that, we have the management's discussion and analysis, or MDA. This is where the company's leaders, the ones who actually run the show, explain what the numbers mean. They'll talk about why revenue went up or down, why expenses changed, and what they see as the future for the company. It is like the company's own interpretation of its financial report card. And it usually gives us a lot of insight into their thinking and strategy. And then of course they've included a press release. This is often a more polished and positive spin on their financial results, designed for the public and investors to digest easily. It is usually the first thing people will see, but the real story is often in the detailed financial statements and that management discussion. Let's dig into what these financial statements might be telling us. While we don't have the specific numbers right here in this filing document summary, typically these reports will detail revenue, costs, profits, and cash flow. For a company like CCSC Technology, which is likely involved in some aspect of technology and international holdings, we'd be looking for trends in their sales, how much they are spending to produce their goods or services, and whether they are making a profit. Were sales booming? Did they have to cut costs to stay afloat? Are they generating enough cash to reinvest and grow? These are the kinds of questions we're looking to answer from their financials. Looking at the 6 months ending the 30th of September 2025, it is crucial to compare these figures to the same period in the previous year. If revenue has grown significantly, that is a positive sign. It means they are selling more of their products or services. But we also need to check if their expenses have grown even faster, if costs are rising more quickly than sales. Their profit margins will shrink, which is a concern. For example, if revenue increased by say 10%, but their cost of goods sold went up by 15%, that means for every dollar they made, less is staying as profit. This could be due to rising material costs, supply chain issues, or inefficiency in their operations. We also examined their operating expenses, that is things like salaries, marketing, and rent. If these are creeping up without a corresponding jump in sales, it signals potential problems with cost management. Now, the balance sheet within these statements is just as important. This section shows us what assets the company owns, what debts it owes, and the owner's stake in the company. Are they heavily in debt? Do they have enough cash on hand to cover their short-term obligations? A company with a lot of debt might be considered riskier, especially if interest rates are high or if their profits are unstable. On the flip side, a strong cash position can give them flexibility to invest in new opportunities or weather economic downturns. The management's discussion, this part is key to understanding the why behind the numbers. If they reported a dip in sales, management might explain it by talking about increased competition, a slowdown in a particular market, or challenges with a specific product. Conversely, if sales are up, they'll likely highlight successful product launches, expansion into new regions, or effective marketing campaigns. They also discuss their financial condition, which means they talk about their cash flow, their debt, and their plans for the future. Are they planning to borrow more money? Are they looking to sell off some assets? This section really paints a picture of the company's outlook from their perspective. And signing off on this report is Kung Lok Chu, the Chief Executive Officer. When the CEO signs off, it signifies that the company leadership stands behind the information presented in the report. It is a formal acknowledgement of their responsibility for the accuracy and completeness of the disclosures. So, what is the story here? CCSC Technology International Holdings Limited is providing a regular financial update, which is standard practice. The fact that they are filing this 6K means they are keeping investors informed. The real substance for us as observers lies in dissecting those unaudited financial statements and the management's explanation. Are they growing their top line, meaning their revenue, and is that growth profitable? How are they managing their costs and their debt? The management discussion and analysis will be the place to look for their strategic narrative behind these numbers. Without seeing the actual figures, it is hard to give a definitive verdict, but the framework is there to understand their performance. We need to see if their revenue is growing faster than their expenses, if their debt is manageable, and if they are generating positive cash flow. These are the fundamental indicators of a healthy business. Now, taking a step back and looking at the bigger picture for CCSC technology without the specific financial numbers, it is difficult to definitively assess their direction. However, the act of filing these in-depth reports itself signals a commitment to transparency, which is generally a positive trait for any publicly traded company. The main risk for any international holding company can be regulatory changes in different countries, currency fluctuations, and geopolitical instability. The opportunity typically lies in leveraging their international presence to tap into diverse markets and economies. Ultimately, the strength or weakness of CCSC technology will be revealed in the details of their revenue growth, profitability margins, and their ability to manage their debt and cash flow effectively. As investors or observers, we need to look beyond the headlines and dive into the financial statements and management commentary to form a clear opinion. Alright, that is our breakdown of CCSC Technology's latest filing. What is your take on what this report signals for the company's future? Drop your thoughts in the comments below. If this analysis was valuable, hitting that like button really helps us out, and subscribe for more deep dives into corporate filings. Don't forget to check out our Discord community in the description for more discussions. Thanks for watching. See you next time.